Good morning. It is Sunday, June 4th, 2023. Okay, let me check on YouTube to make sure everything is up and running properly. Before I start, let's see. Let me go to YouTube. I think everything is up and running. Looking good. If I don't, usually bad thing happens. And it would have this morning when I first load the OBS software to stream. The latest update on Thinkorswim changed the settings, so I had to go back and make sure that it's back on. Let me see. Let me move that a little bit so that you can see the month below. All right, now we're back to full speed. Right, real quick. TLT. Once again, strong economic data is the culprit for the weakness, just as it was the past 3 weeks now, right? So at least now that with the debt ceiling removed, we can say that it's, I'm sure there's people that sell TLT because of the debt ceiling worry, make no sense, but it's mostly strong economic data. Okay, so there was no violent pop in TLT because of the economic data. There was a nice, decent move, 3% ish on that, but who knows why, right? Who knows? Is it the same dummy that sell the week prior? Who knows? It makes no sense sometimes, but strong economic data. So what now? I sold a few put spread at 101, right? The gap fill. So it can easily, it's a very tiny gap fill. It can easily do that. To me, it's a good range, okay? It's a good range to trade TLT. If you are an active trader on TLT, certainly you can take a look at this chart and see that once, twice, 3 times, right? It's a good range. So if you want to be even extra safe, sell spread at 100, 197 spread. And if you get some share assigned down there, is that a big deal? No, okay, no. You should make money. You will make money. If you even wait a week or two, you will make profit on that. So I wouldn't worry about, I will sell 101 if further decline on Monday and Tuesday this week. Would I sell 100? Yeah, no brainer. Okay, no brainer. The VIX I did sell 32 and 31 spread. Not overly concerned about that. Just as I was selling 35 and 34 and 33, right? Sure, this is a grinding lower, it's a market march higher, but it is getting ludicrous, okay? It is getting super crazy. Let's take a look at the VIX, okay? Because I can't trade the VIX. I trade VXX, but look at the VIX. That's crazy, okay? We are literally a few ticks away from the 52-week low. Would you want to be bullish in the market right now? I'm not, okay? If anything, if you long, even if you have a long-term horizon, the right thing to do is be careful, trim a little bit, take some profit, go, buy some hedge. When protection of the market is cheap, you buy some. So that's the rule that my teacher taught me. When protection is cheap, buy some. It is that simple. And right now we are very near the point of some kind of a 5% correction. And if there is one, yay, all right. At least I have a couple protection. I plan to add more. I usually have for the past couple of weeks, with the exception of last week, because I knew the debt ceiling is gonna get passed, and my hunch is that the market will grind higher, and it did. So I did not do any VXX put spread at all last week. I stayed out of it. But the prior 3 weeks, I did. So this week, I'm back to doing it. And in the past couple of weeks, I have done 4 each time. So far, I got 2 in. And on further weakness on Monday or Tuesday, I will sell maybe some 30-27 spread. That sounds pretty good, right? As far as VXX. All right, let's move on to the SPY real quick. It is pretty much near the spot that I said it's time to go. But if you want to stay long, you can. I'm not, okay? It filled the gap, okay? The tiny gap up there, is there room to get up to 431? Yeah, 432. If you long the SPY, I say that's the target to trim even more. If you have anything in the SPY or in the overall market, right? It's a wise thing to do. Look, why? Right here, okay? That's where that line came from. That line came from a tough spot where it bounced off before. It was a struggle for 2 or 3 weeks here, and then it give, and then it would become resistant. Okay, so don't overlook the usual saying in technical analysis: what was support become resistance, and vice versa. So to me, there's not much room left there. QQQ much stronger, but once again, you can do the same thing. Okay, there is a little bit more room to run, but it's pretty dicey. It have been a breathtaking move this past month, driven by basically a handful of stock. I think if you look at the statistic, I'm sure if you pay attention to the talking heads on TV, something like the top 5 or 7 NASDAQ stock carry 80% plus of this move right here. This is insane. Okay, it's most NASDAQ stock outside of maybe half a dozen are not doing this. There is no, many NASDAQ stock did not have a 50% pop, okay, outside of a handful of them. Maybe more than 5 because NVIDIA carry a lot of chips higher too. But outside of chips related and AI related, not a heck of a lot. So I'm not all bullish on there. So be careful. Since we're talking tech, let's go real quick on tech. Meta, I still held on to everything that I have so far, not trimming one share, but it's getting close. Okay, it's getting close. Why do I say that? I talked about this before. Let's take a look at the 2-year time frame. Right, the gap fill, getting close. Okay, getting close. So I'm gonna set an alert so that I don't completely zone out when this happens. Hopefully I'll be around to make sure that things will trigger properly, but I will set a sell. I will put a sell order on at least 10% of my remaining share up there. Above trim time. Okay, so yeah, what a move, okay? What a move on Meta. Kudos to Zuck to do the right thing, right? You can hate him all you want, but as a CEO, he's not blind. Google, I have, well, for the past couple of weeks, I play Googles with short put spread, very small exposure using the 20 MA as my protector. But other than that, the only share I have is the 50 shares in my son's account, which doing quite well because he has Nvidia, he has Meta. Hey, he's 16 years old. His portfolio can have a whole lot of technology to ride out the next 10 years. Okay, there's no concern on his portfolio. I'm 56. Big difference between 56 and 16. I can't have that kind of exposure at my age. So good on him to have that. So it's Google. It's at the zone that I wouldn't go long here. Why? Okay, this is the area where it's bouncing around support. Okay, I'm gonna draw in a line so that you know that if it breaks this line, if you want to do a stop on your share, okay, this area, to me, the 20 MA is too far away. It's just too far. Okay, you can't go from 124 to down to just below 119, right? That's too much in my opinion. So if you want to set a stop at 122-ish, you can. It kind of line up fairly decent with these wicks, right? Because look, every time you have a wick down, look like there are buyer coming in to prop it up twice, 3 times, 4 times, right? So to me, it's a very obvious looking area where buys are coming in. But for whatever reason, if those buyers at that level say no more, or they bail, or there is a market correction, and it dip below, it breach that level of support, then say hello to the 20. And I think if there is a move down here, I would say sell 115, 110 spread, right? You know, to me, the gap fill is a no-brainer to add, okay? No-brainer. Put an alert there. Buy, buy, buy. If there's a gap fill down there, yeah. Who's with me? Oh my god. Yes, I would sell 115, 110 spread. And if it dipped below that, I would let the share be assigned. That's how I would play it, okay? To me, no-brainer. No-brainer. And if the NASDAQ correct 5% or 10%, oh, I can see it. I can see it. And you can apply this to a lot of other high-tech stock too, okay? Microsoft, it's time to go, right? It's time. It's there. What a crazy move, okay? I thought the channel high was it. And then for a while, that looked like a smart move. And then you get the big gap, right? Big gap. And then it has carried the NASDAQ and the S&P. But to me, yeah, right now the risk reward is not to be long in any of these stocks, okay? Can't say enough that nothing go up forever. When the last person, the last FOMO come in, then that's the rug pull will come. Tesla. Same thing here, okay? We're at the level where it's struggle. Look, a lot of these things are not random, okay? I use that word often. I draw it in so that for those that are new here, you can see it. Okay, look, support, support, finally give, resistant. Almost there, seller come in. Almost there now. Okay, sure, it's a 200-day MA. Nice, yeah, it's long term. It's definitely a decent trend for Tesla as far as long term, but it has been a long-term downtrend. Okay, this stock has trend lower for a long time. That's why the 200 MA is finally almost flatlining, but it's still down. Okay, it's still down, and plus now, this is not good. Okay, this right here, it's time to go on Tesla. I'm not bullish on Tesla now. Can it break this? If it does, where next? 233. Okay, if it get up here, if you want to be greedy, put a sell order up there, right? The channel high. Look, the downtrend is there, right? At least take a third, a quarter of your position at the minimum, if not more, because yeah, with the way the Nasdaq is right now, this is not the time to be greedy. You can stay greedy, but at least know where to get off the train. All right, let's move on. Enough of technology, right? Let's do one more. The culprit, Nvidia. Let's take a look at Nvidia. I mentioned last week that any dip won't last long, and so far that's the case. Okay, so if you want to trade Tesla, buy the dip, sell the rip, but be quick. Buy small, trade small, be quick because yeah, the FOMO is not gonna last forever. Okay, there will be. I did sell put spread going out to August and beyond, right? So that I can, if I can sell put spread going out 2 months every week. Okay, if I push it out every 2 weeks, I can sell put spread in the same time frame down here in the gap fill area and get $2 credit. I'm doing it, okay, because just one, I don't need to have a lot of spread every week. I sell one going forward until I see a change in trend. But for now, I like that play. I can sell put spread in a 2 months to 10 weeks time frame and grab $2 or more in credit down here. Yeah, I'll keep doing it. Keep doing it and collect $200. Pass go. All right. Let's talk about pharma. What a crazy week. Wow. All of us that are exposed to big pharma had a rude awakening on Thursday. What the F, right? What the F happened there? I mean, yes, it's mostly FV. At first, I thought it was like sector-wide kind of sell-off, but it turns out it's Humira related, which is that's why Amgen sell-off is more stupid. FV sell-off for sure, and the bounce surprised me. First of all, the sell-off surprised me, the severity of it surprised me, and the bounce also surprised me because I had 136, 133 spread. I also had 135, 132 spread. And in the early part of Friday, on the pop, I said, all right, on this right here, in the early part when it was over 135, I'm like, okay, I can't chance and sit here and wait for 136 to be clear. I can close out on 136 for a small loss. And then, of course, sell next week, right? So I sold 134 put spread for next week. And then I did the same thing for the 135 spread, only to see, of course, in hindsight, if I left everything alone, it would be fine. But no, but I don't mind it because I sold 133, 134, 131, and then I sold 130, 127. I even sold 129, 126 because it was plenty of juice in those areas. So I just had to delay 1 week. Okay, so Amgen is even sillier because why? Amgen, of course, as you know, if you don't know, they have a generic drug that compete with Humira, but the sale is very small. If you look at the sales report for that particular drug, it is very tiny. You're talking 100 million compared to billions, okay? Compared to billions in FV. So sure, the generic that came out last week, that was 85% cheaper than Humira, caused a big spook. But Amgen sales total for that is negligent. It's a rounding number for them. It's probably one of the smallest. Sure, it hurt future sales. I understand that, but the impact was way too severe. Okay, way too severe. And I'm glad I left. I had a whole bunch of 212 put spread that I was not worried. I closed out the 217.5 spread for a small loss, and then I sold a bunch of 210, 205 spread. It was crazy. But I like Amgen here. I like even buying the share outright at this level. Okay, I think the risk reward for those that have the stomach for some volatility, if you want exposure to Amgen, I think the risk reward is to go long here. I have a small amount of share, and I will continue to add a little bit here and there, as well as sell put spread. But what an ugly trend, right? This has been one ugly move, no doubt. Let's Let's take a look at this. Let's draw some chart. Look at that. Okay, so the downtrend is pretty clear right there, right? Is there a channel? Let's take a look. Let's drag it down. Yeah, I think this is a decent channel, right? So now I did that. Why? If this break, if this ugly long-term multi-year trend breaks, okay, look, and if you go back 10 years, it's there, okay? So this is the key here. And for the week, it ended right there. So it's right on support, okay? That's why I sold the 217.5 spread, because I thought that's a line in the sand. And so far it has been. It violated that for a couple hours, but it's back where it should be. But if it fail, where next? Okay, 204-ish. Okay, that's where the, if you want to look at that as a new channel, you can do that, right? So I like Amgen here. Let's do 10-year chart so that you see. See, look, that trend line is key long term. Many times it came way back and then it bounce, 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 bounce. Okay, so yeah, we're there. Now is no better time than to be long on Amgen, right? So I like Amgen a lot here, more so than AbbVie. At this point, I like Amgen more than AbbVie. Eli Lilly, what's next? What's next? I still have all the share. Okay, still have all the share. I actually placed an order to buy some last week, but the bounce was too violent. um, to me, if you don't have a lot and you want to sell a put spread, yeah, down here, do a 410, 410, 405. Okay, to me, that might be a decent play. Of course, it's high risk because Eli Lilly can move in a hurry to fill the gap, right? But to me, if you want to be even safer, do 395, 390. If there is any kind of credit, using the 50 MA as your protector is not a bad idea. Okay, it's not a bad idea. I always advise that if you're gonna play doing the bull put spread down there, use a 50 MA. Not that it's a huge MA that significant. The 20 MA, of course, is the boss, right? It's a boss, but at least use something. Use some kind of moving average, some kind of resistance, some kind of support to protect you when you do the sell put spread. Not that it will work all the time, but at least you have something. Pfizer, looking fine. It's okay. Nothing here to be excited or to be bummed out. Okay, it's. I figured it would do this for a while, and it is doing this for a while down here. I'm not adding. JSK, I did add. Okay, I did add the JSK. This is too silly to avoid, to ignore. I still have not bought everything that I trim up here, so I can still add. So on weakness, to me, it's near the point of where would I add more, because it's a range. Okay, as always, I talk about a lot of time support and resistance is just not one area, like one number. It's a zone, and we at that zone right now. Okay, we at that zone. If we at that zone up here, from where the 200-day moving average was, all the way down to 33.25-ish is a zone. So it's about a 75 cents zone that I think is an area of support, and it has been. It acting exactly what I thought it would do once it broke and come down. That's why I waited. I will keep adding the JSK. I had a put spread that expired worthless. I sold it when XBI was down here. I would chase it here. Okay, the risk reward right now is not to be long on XBI. The time to be long is 82-ish. When you see below 83, yeah, sell 81, sell 80 put spread, rinse and repeat, right? Right now, the risk reward is not there. I won't touch it. There is other Gilead. Okay, now I've been watching Gilead for quite some time with no position, no exposure. Okay, but um, it was dicey. I was watching it because to me, this ref low is key, right? And looked like it struggled. Buy was coming in to support, but it struggled. So for now, um, if you want to play it, I say the safer play is to sell put spread at the gap fill. If there's an overall market correction of 5%, can I see Gilead come down here? Yeah, okay, but buy the dip down here. Add share, I would buy the share outright. That's how much I like Gilead down here. But I would sell put spread for sure, like 70, 67 kind of area. Yeah. Last one as far as biotech. Biogen stronger, but um, to me, the time to go was up here, right? Once it broke the 52-week high up here, I was like, get out, right? So sure, it went up another $10, right? From like 309 ish to 319, it moved another 3% higher. But now, yeah, no. To me, the path of least resistance for Biogen is down here. Now, to me, the 200-day moving average could be a very key spot. Okay, could be. All right, so I'm just watching. I'm not doing anything with Biogen. No need to. Doesn't want to. Last one, J&J. I did sell some put spread at 152.5. Last week I did 155, and it's expired harmlessly. Um, if there is a dip down to the 154-ish level, I would do the same thing again. I would sell 152.5, 147.5 put spread. Yeah. If the 150, if the move down is deeper, then sell 150, 147 put spread. I'm using a very tight range. Okay, smaller credit, but it's a safer play. Okay, let's move on. The big mistake last week or 2 weeks ago was Ulta, right? And I'm start to able to recoup that. I would have recouped that, of course, even better if I let the 415 expire worthlessly. But once again, the move was a lot stronger than I expected. Sure, on this move right here, when it got to 415 and above, I'm just like, okay, I can close out the 415, 410 spread and be happy with that. Of course, that looked like a smart thing to do until, of course, in the afternoon after lunch, then it ramped up, right? So by then it's too late. Luckily, I have more 405, 400 put spread that expired worthlessly. So the damage 2 weeks ago has been corrected partly. And of course, when it was down here, I sold spread. I sold 400, 395 put spread for this week. So the fixing continue. Target, same thing. Okay, that was a ugly chart, but I like this. Okay, I do like this. As much I hate Target, this is a good move right here. You got the three candle reverse head and shoulder kind of thing. So once again, I had one. This one was still not fixed, even though I did sell quite a bunch of put spread below, but I also sold some put spread right here at 136, 133. That was problematic still, and so I had to close that out at a loss and sold some 132, 129 put spread for this week. So the fixing of target position is still ongoing as always. Okay, when I make a mistake, I don't try to recoup the mistake all at once. Sometimes I can do it all at once, sometimes, but not on target. That was a pretty big mistake. This ugly move was pretty big. So no hurry. Okay, it will take time. ELV, it's time to go. Okay, gosh, this is a great stock to trade. I'm telling you, for those that follow me, I hope you took the opportunity, the crazy swing on this one. It's a great trading stock. Great trading stock. So if you bought it, if you sell put spread, if you own share outright, it's time to go. Can you go higher? Can you go from 470 to 480 something? Yeah, but that's a nice move. Okay, this if you bought prior, if you buy into the fear of the debt ceiling thing, good on you. I sold literally a dozen put spread the past 2 weeks. Okay, I sold two more last week before the pump. uh, I wish I sold more, but that's okay. It has been a great stock for me to own shares as well as to sell spread. So for now, right now, it's time to go. Okay, UNH, yes, if you have it, 505. Okay, don't be stupid, don't be greedy. It has been a nice move from below 480. Okay, that's a nice move, right? $25 move. If you nibble below 480, you got $25, $30 profit here. Take it, right? Take it. It's been hit, and of course, right now I have nothing, no position on UNH. Okay, CI, which I did, I sold a couple of put spread on this ugly move, and they will expire worthless. So for now, it's time to go. Look, okay. Now, can CI break through and run? Possible, but given the history, I don't know what would be the catalyst. Okay, to me, I don't understand this ugly move down here. Sure, I read all the news and headline, but still, that is an ugly move from 340 down to 250. So uh, until proven otherwise, it needs to break out clearly and then check back fully for me to be more bullish on CI. But for now, I'm quite happy with the put spread I have. Leave it alone. Okay, leave it alone. Oh, what can I say about Lockheed Martin? Okay, Lockheed Martin. That was an ugly move into the debt ceiling talk, right? I talk about how, it's people worry about the cut in defense. Guess what? There's no cut in defense. Okay, so once again, this is another stock that I have made a lot of good profit selling put spread for a long time. I have share too. On the market pullback, I will keep doing it. Okay, to me right now, I have the share. I have no need to trim. Would I trim up here? Maybe. Would I trim if it get to the 2-day? In fact, I'm gonna put an alert so that I know. Trim? Question mark. Okay. For sure. If I don't trim or trim here, that up there 467, the 50 MA. No, the 100 MA. Yeah, that's a must. Okay, that's not trimming up there would be stupid. Okay, and then of course after that 475. What would be the reason for Lockheed Martin to go to all-time high? China, right? So it could be a violent move. Okay, violent move. If something crazy in China with Taiwan, then you're gonna have another uh, pop in money flow into the defense sector. For now, it's all right. For now, if you did buy into the fear of the debt ceiling and cutting defense, you did good. You should be making money here. Alrighty, banks. Okay, KRE. Wow, what a move, right? I trim, not a lot, but I trim near the end. Well, in the afternoon, because the last time it got up here, it reversed. So this time, at the same spot, I trim a little bit. I trim 10% of my position in KRE. On any check back, I buy it back. Okay, to me, why not? If I sell it at 41 something, would I buy it back below 40? Yeah, I think long term, KRE could be a huge winner long term, but I don't mind trading, 5 or 10% of my position on the pop, because if TLT is telegraphing that the Fed is not done, what makes you think the regional banks is out of the woods? What is it that you would make you have confidence that another bank is not gonna have some kind of issues if the Fed raise again? TLT is signaling that the Fed is not done for good. They might pause, but they might pause next week, but then talk hawkish, like they can still come back and raise because the econ data is too strong. So it's a lot of um, ongoing data that will create trading opportunities for KRE. So right now it's still in the camp of sell the rip, accumulate on the dip. Bank of America, no doubt, we at a level that that had twice now. Okay, so I didn't trim anything. I thought about it. But I'm just like, well, since I'm trimming KRE, I like Bank of America even more than KRE, and I do think Bank of America do have a 10% plus potential move. So um, I would like to add, to be honest. And would I add? Maybe, if there is a breakout. Okay, if there is a breakout and a check back and it hold and the Fed is done, I think I can add to Bank of America right here. But for now, I'm fine with my position. Goldman Sachs, I've been selling put spread, and that has been working out perfectly. Okay, to me, it's so easy to sell spread where down here, 310, 305. Okay, every time Goldman Sachs came down to the 317, 318 range, as it did for the past 4 weeks, yeah, the gap fill. Okay, would I buy the share outright down here? Maybe. Okay, maybe, but for sure, I will sell the put spread down there, and depend on what happened, would I let one spread aside and buy some share with a cost basis below 310? Yeah. Okay, absolutely. I would love that. Okay, so I like that. I like the risk reward there with Goldman Sachs. No need to chase here. Okay, right here it's more like trim time. Why? Why do I say that? Is there anything going on with the IPO market? Is there a booming IPO market right now? No. Okay. Regardless of what the stock market is doing, the capital market is very weak. There is very little merging and acquisition. There's very little IPO. So it's not anything that has a catalyst to move Goldman Sachs much higher. So for now, I'm okay to sell spread down here until there is a change in the capital market, right? All right. What else? What else? DGX. What a surprise. Okay. What a surprise. I trimmed some. I took 5% off the table on this move. Okay. Because for those that follow me, I start to buy down here. To me, it was a no-brainer to buy below 132, down to 130 something. Yeah. And now we got a $5 move. Okay. I like it. Where else would I sell? 137. More? 139, 140. Okay, so for me, between 137 and 140 is the area that I most likely will exit at least 75% and maybe let another 25% hang on to see if it can get up there. But for me, right now, I took 5% off, maybe another 5% up there, another 5%, 10%, whatever, but at least half should be gone up here in the 140 range. And then the rest, let it run. Now, I like the competitor much more, LH. Okay, LH had a much weaker downtrend that I'm watching it. Um, I want to see what it's going to do at the 20 MA. But I might start to nibble on a dip because I do like. I mean, I have some DGX, but not a lot. But I don't mind adding to LH here because I think LH in the 212 area, the risk reward is to stay or to go long. So I like what's right now. LH is a little bit more attractive, and I would rather add to LH or buy into LH than to add to DGX. Okay, so I like that. I like that a lot. Um, let's see, JBHT. I was watching it. I did sell put spread the last couple of weeks down here in the 160, 155 range. For now, I have nothing. Okay, I'm watching it. If there's a dip, then yeah, I do the same. I keep doing the same. Play the range, right? Play the range. Let's talk about discretionary before I go. Pepsi. All right, I sold 177.5, 172.5 spread. I did not buy any share. Um, I will probably keep on doing that if there's any juice down there because I have the 100 and the 200 as my protector. To me, that's the best play on Pepsi on any dip back down to the low 180 or below 180. Then I sell spread down there. Okay, because I like Pepsi. I didn't love Pepsi up here. I make it very clear from 180, uh, from 186-ish and above. I said it's time to go. Okay, I was very clear about that, and now it's worth nibbling for sure. Buying the share outright, 177-ish would be the spot that I would start to buy share outright, but it need to get down there. Okay, for me to do that. Otherwise, I sell put spread below. I would love to see it down here at the channel low, at this trend line down here. Love it. 173, yeah, that would be the spot to buy a lot. KO. Once again, I bought below 60, right? That was a no-brainer to buy here. I did not trim, or did I trim? If I did, it's small. Okay, it's small amount. I may have trimmed like 5% of my position. I don't have a lot of share. But on any kind of pullback to 60, yeah, there's not a whole lot of credits juice on puts. Okay, so it's not. I just had to buy the share outright. Okay, so I would not chase Coke here. I would sell my Coke 62, 63, yeah, up there. If they pop anywhere above 62, I would start trimming into 62 and a half. But for now, I'm happy that I bought into this crazy dump. Last one, Starbucks, all right? Oh my goodness, this was crazy, right? But it bounced where it's supposed to, right? I can't stress enough that if you use TA, if you use chart to look at where to buy, where to sell, often you get yourself not in very deep troubles, right? So if you're looking to add to Starbucks, sure, did I buy into Starbucks here? Yes, because I thought the 50, the 100 MA is going to hold, but it didn't. I sell put spread down here, okay? And right now, it's at a pretty good spot. Would I buy it right now? No. Okay. Would I add to it? No. I'm fine with the share I have. I haven't trimmed anything, but I would look to add more if this 200-day moving average hold. I would sell put spread at 97 94. That would be the spread I'm doing because it has been a decent area to bounce. Okay, it tests 98 many times. All right, so to play safe, I would rather do 97, 94, or 96, 93, like a $3 spread. But I like Starbucks here. I would look to add to Starbucks. Not right now, but I'm watching closely. That's it for this week. Hopefully it's helpful. Thank you for watching. Later.